Welcome to Boutiques Connect Update with me, Joanne Bainham. Today I'm chatting to Gavin Wood, Chief Investment Officer, Camissa Asset Management. Welcome, Gavin.
Thank you very much.
Before we went live, so to speak, you and I were off camera chatting, and you said to me, we make very deliberate decisions in our business, we're very considered, and it's very important that we look after our clients for the long term. In that vein, what are some of the things you've been doing lately that keep in context with that? So what have you been doing on a sales, distribution, asset management?
Yeah, so I think the most important thing, as I was saying to you, is that we deliver for our existing clients. So that means that in terms of investment performance, we deliver for our clients year in, year out, what we say we're going to deliver in terms of mandate. So whether it's a low risk fund like our stable fund or our equity funds at the high risk end, we need to be delivering in, year out. And on that score, I think we are doing relatively well. On the low risk side, we've won a number of recent awards, and our stable fund is really performing very nicely. Managing the downside risk, which is what it says on the tin. And despite heavy risk management, it's still performing very strongly. So that's very gratifying, and our clients are very happy there. On the high risk front, on the equity front, also delivering very nicely, especially in the last year or so, as the market has changed quite a bit, and we've been well positioned for that. So I think that's the first and most important thing. Our clients need to be looked after, our existing clients. But then I think our business is at a size where I think we've got some room to grow still. And as I've said before, we do intend to at some point cap our asset classes that are not scalable and don't have unlimited bandwidth, so that we can preserve our performance edge so that we can continue to deliver for our clients. So we do have incremental room to grow. And on that front, there are a number of things we've been doing in the background, which is one of those things that it's hard to explain to people, but you need a critical mass before you can attract really good skills in certain areas. And so we've recently hit 73 billion Rand in assets under management, which is an all-time record for us. And with that sort of scale, we accumulate resources so that we can now expand our distribution on the distribution front. And we've recently had some really good hires that we've made to our business. On the institutional front, we've got a very good person who is come to us from Sanlam, and he's going to be spearheading further incremental growth in our institutional retirement fund market, in particular on the umbrella funds and multi-manager fund side, and member choice guided architecture front. Then on the retail front, we have divided our retail distribution, our unit trust distribution, into almost two areas. One, our traditional area, which is the IFA support, which is headed by Colin Adams and has been for many, many years. He was previously with Coronation. And then more recently, we've recruited a guy called Salim Sonde, who was with Alan Gray for many, many years. Our audience will possibly recognize him and his name. And he will spearhead our relationships with increasingly important DFMs and multi-managers on the retail and unit trust side. And he's very energized to join a medium-sized business with lots of incremental room to grow. And we're very gratified to be able to recruit a person of his caliber who sees the potential in our business and sees the fertile ground in our business. So that's very exciting. And then finally, for the first time, we've got to the point where we've found the individual to spearhead this, but also got the resources to tentatively head into the advertising arena. And
Tell me more.
So one of our goals is in particular goal, and a frustration I think some of our IFA supporters have, is when they come to a client and they say, we're going to recommend a third with asset managers, 2 household names that you can see in the airports. And then the third one is Camissa Asset Management. The client, despite the IFA supporting us and being a believer, the client doesn't know who we are. So this is the ultimate man in the street or woman in the street who doesn't know who we are, Camissa. And with their life savings, I think it's very, very important that they feel comfortable and they're dealing with a trusted organization. And so we believe that it will aid our distribution, our IFA supporters, amongst whom there are many and will be possibly in the audience, and other supporters, to be able to recommend us and then have the client trust that that's a good recommendation. So we have hired somebody from the advertising industry a strategist to spearhead that, and we have a limited budget, and so it'll be very, very contained and incremental into the future, and hopefully will pay off. But that's another exciting element that just underpins our unit trust growth strategy, which is an area of our business we want to grow to from currently just under a third of our assets under management to into the sort of half of our assets under management, to get a good balance between retail and institutional.
Okay, so as you were talking, something has occurred to me. On the sales front, when you've had new people join you, what's the feedback they've given you from having come from different organizations? You mentioned Sanlam and you mentioned Ellen Gray, and I'm not picking on those two names. I'm just highlighting they've come from bigger organizations. What have they said is the reason they feel at home at Camissa? What are the words they use to describe why this is somewhere they want to be?
Yeah, I think the attraction is that people see the platform that we've built we've just passed our anniversary for our 23rd birthday. They see the platform we've built and the track record we've built in many areas other than investment performance as one of, I think, nascent potential for quite strong growth and incremental advancement into the future. And that's built on a number of things. One is we have a lot of continuity amongst our people. And so we have people that have been with us, our founders, myself and Roland Grieve, have been together for the entire period. We founded the business. And our investment team, the core of our investment team, has been with us for well over 20 years. Others have been 15, 17, 18 years. So a lot of continuity in the rest of our business and operations and compliance, and that's the client services side, lots of continuity. People come to our organization and deliver a lot for us, but also stay for a very long time. And within that, I think that really is in contrast to the way a lot of large corporates, whether they mean it or not, treat their staff. I think when you grow to a certain scale, it becomes more of an impersonal relationship with your staff, and people don't necessarily stay for the right reason. There's politics, there's getting ahead within a hierarchy. Then our environment, where we purposefully want to stay smallish, and contained, I think people see a home for the long term, and really it's a place where they can invest their time for the long term, which is consistent with what we're promising our clients, and also that they see the excitement for the potential that we have for growth and the ability that they have to really make a difference to a business. Because I think when you're in a large organization, there are many strengths in a large organization. But one of the problems, I think, people who are more entrepreneurial and go-getter type people, they feel that their incremental efforts don't necessarily have a large impact on an already large base. So when you're coming at it from a medium-sized base, I think people see a real potential for them to be able to come in and add value, and then this continuity, this long-term continuity, to stay for a considerable period of time and build up a relationship of trust with the others there, and also an exciting and interesting and I think friendly and environment in which to work. And I think a lot of people want to have that as their sort of corporate home.
And I guess also, I mean, you're a tight-knit bunch of people, I'd imagine, if you've had that kind of longevity.
Yeah.
Are you quite difficult about who you hire as well? Because it's important, you don't want someone coming in who's going to upset the apple cart, so to speak.
Yeah.
So are you quite picky about who you choose?
Yeah, very much so. So on the investment team side, we very seldom, if ever, have hired senior people. So incrementally at one point, 15 to 17 years ago, I'm going to forget, we hired a guy called Abdul Davids, who came to us from Allen Gray, and I knew him really well from prior interactions. And his philosophy was very aligned with ours, and he brought a lot to us quite a long time ago and stayed with us ever since. So he was one of the very few senior hires. We've hired one or two more senior analysts, investment professionals, but also with a lot of circumspection. Generally, we don't offer them a big package to join us. We're taking a lot of risk with them. And we have a commitment to them that if they prove themselves, the remuneration will ratchet up, and they will be in line with variable remuneration, so and equity shares in the business. So that's been incremental, but by and large, what we've done is grown our talent on the investment team from the ground up. And so at the moment, we've got a very strong junior team junior in terms of years of experience, very highly qualified, lots of energy, lots of passion. And generally what we pair each of those with is at least one of them with a senior person, so that they work together as a tight-knit team. Often it's a team of 2 or 3. And so they form a research pod, and they're working on the exact same work. And that's essentially what their senior person is delivering. So the senior person has a vested interest in the junior, in developing the junior and mentoring them so that they can incrementally produce better work as a team. We found that works really well. Also for the junior, they feel that they are doing really advanced work with high responsibility without the stress of needing to make the investment calls. So that's on the investment team front. It's mostly growing our own talent through recruiting very talented juniors. And then on the business front, we're very incrementally circumspect about who we hire. I think it's natural for small organizations to be this way, so I don't think it's unique to us. But when you are a 50 or 55 person organization, to hire one additional person at the senior level, that's very important. That's very important in terms of amount they cost us, but also in terms of the impact that they can have negatively or positively on the culture. So what we've done often is waited until the perfect person comes along. And sometimes what we've done is recruited in advance of our needs when the perfect person comes along at the wrong time, perhaps in advance of our needs. So on the advertising front, we've been trying to get this off the ground for 2 or 3 years, and we've struggled to find the perfect person, and we think we've now found her and brought her in from Durban, from an advertising agency. And then on the distribution front, we've recruited some really difficult to hire people. They're generally very well remunerated at our large competitors who can afford to pay a lot, and it's difficult to pry them loose from those competitors. So we wait our time, and on the distribution front, we recruited, I think, some very experienced people who are very energized to be with us.
Gavin, I've interviewed many times for equity panels, and it's very obvious you have a very long-term view when you look at stocks. Would you say that way of running money also filters down to the way you run your business?
Very much so. I think all of our senior people are shareholders in our business. They own 74% of our business, and so therefore they want to maximize, and I've often had conversations with them, they want to maximize the value of their shares. So that's a long-term game. They're not selling, they're not cashing them in. They want to own those shares, they want to get more if they can, and they want to get to a point where they're earning material dividends from those shares, and that will be a long-term investment for them and a large incremental revenue stream for them going forward that isn't tied to remuneration. It's fixed for them. So most people have that mindset, most people at the senior level. But then I think the value to us of having long-term relationships is huge. The trust you can build up and the knowledge of the strengths and weaknesses of your colleagues over a very long period of time has a huge amount of importance. And I think it eliminates a lot of inefficiencies within a business and bureaucracy, unnecessary bureaucracy, when you can just trust certain people to do things and delegate to them and not necessarily look over their shoulder and run a thinner structure with fewer meetings and less bureaucracy. I think
that makes sound wonderful.
Yeah, it's how we tend to do it. And so I think that a long-term approach to managing money, a long-term approach to developing and retaining people is very much how we think. And I mean, I'm committed, I'm a large shareholder, I'm committed to the long term. This is the last job I have. Most of my senior colleagues are in the same boat.
Well, Warren Buffett just retired at 95. I think you've got a long way ahead of you still, Gavin. That's still okay.
My great-grandfather lived to 101, so.
Well, there you have it.
Yeah.
Gavin, thank you very much.
Thank you.